A lot has happened this week. Tesla stock has continued to shoot upwards and it's almost vertical in the last month. It's almost quadrupled since I think its coronavirus lows. I've also revised my portfolio a bit. I've decided to remove some companies and also buy a few more and cost average down on some. And there's also been a massive breach and scam going along with crypto, which I'll get to later. So the first thing I want to talk about is Tesla's new stock price. So it peaked around $800, making it the largest auto car manufacturer in the world by market cap. So you can see in this graph here, it's overtaken Toyota and it's almost worth double the amount of Toyota, which has been around for absolutely years and years and years. And you can see how Toyota was dominating the market and how Tesla had just absolutely skyrocketed. So what makes it even more incredible here is that Tesla is still making a loss. So why has the price been rising? So I tried doing some digging and the biggest reason I could find is completely down to speculation and hype of Tesla, the company and the stock. So whilst a lot of big names in the investment game, they're still short in Tesla, and the estimates from analysts, they're assuming the fair price value for Tesla is around $800. So a lot of the speculation comes from the assumption that Tesla will be added to the S&P 500, the US index fund that tracks the biggest 500 US companies. This would mean a lot of passive investors who only invest in index funds through ETFs would be purchasing Tesla, and that would be not through purchasing Tesla for its business model or fundamentals, but simply because they want to own a diversified index fund. So once you buy that fund, you're automatically purchasing parts of Tesla, which artificially drives Tesla's price up. So in theory, this will raise Tesla's share price. It has done so historically when companies have been added to the S&P 500. So when Amazon was announced it was going to the S&P 500, the share price rose around 5%. So for Tesla to be included in the S&P 500, it does have to meet certain requirements. The only one it's currently missing is being profitable. As I said earlier, it's still making a loss overall. But the last 3 quarters, it has shown profits. And to be in the S&P 500, it has to show 4 consecutive quarters of profits, which will be revealed in the next earnings report later this week. Which is why I think a lot of the speculation hype has gone on about it, because once this earnings comes out, it could be a massive boost for Tesla and it could jump up again. Personally, my personal opinion on Tesla is, while it's a great company and it's obviously filling a need in the consumers in the market and providing something that consumers want, it's also doing so whilst creating one of the strongest brands in recent years. But even Elon Musk, the CEO, is saying the price is too high, and that was when it was back around $800, and now it's more than double that. So whilst I think it's still quite overvalued, I don't explicitly own any Tesla stock, at least in my 212 portfolios. I do own a small amount in mutual funds, which I'll show you now, my Hargreaves Lansdowne account. So the fund it's in is the Bally Gifford American. This fund has performed fantastically throughout the past few months, and it's returned about 40%. So I only have a small amount invested in it because I'm so widely diversified. A lot of my money is spread through different pies, but this one has performed phenomenally. But with the amount of risk in the market at the moment, I'm happy with the amount I do have invested, and where I'm holding cash, that is for my short-term goals, so it wouldn't be really appropriate to invest all that with the current uncertainty. But for the longer term, I am still throwing money in, and this fund does happen to hold a bit of Tesla. I think it's around 8% here. So, as you can see in this next article here, so Robinhood, a lot of the investment into Tesla has been through Robinhood traders. So it highlights about 40% of Robinhood investors are buying Tesla. So 40,000, I think it's in 4 hours or something crazy like that. So the volume comes from mostly, I'm assuming, unexperienced investors, and this is just driving the price up in a bubble-like fashion. It's just people who have the biggest balls. They want to invest and keep riding it while it's going upwards, but eventually people are going to be scared. They're going to realise it's not going to go on forever. People are going to start selling and it will pop, is my opinion, at least in the short term. I could see it once, if it does get announced it's going to the S&P 500 for another spike. I can definitely see it kind of touching at about $2,000. That's just my kind of uneducated guess and opinion. Just kind of going on consumers' like mindset. I think 2,000 is a nice number, and that's what a lot of people have been saying. Stupid numbers, like I've seen articles saying it could reach $7,000 or something crazy like that. I don't think it's going to be going that high anytime soon, at least, and I think it will definitely drop before it rises again. So, moving on now to my portfolio. Other than depositing a bit more money into it, not much has changed. The market overall has slightly gone up. So I have focused on cost averaging on two companies, being British American Tobacco and National Grid. So I put money into the overall pie, but I've also added a bit extra into these two companies. This is because they've seen the biggest drop out of all my stocks, so I wanted to capitalise while these prices were low. So I believe National Grid was down about 10%, and British American Tobacco is the same, about 8 or 9%. So I think I actually doubled my money. I think I about put £50 in each. So overall, my strategy hasn't changed, but whilst I did average down on National Grid, I have decided to remove it from my pie, which means I won't be averaging or investing into it anymore. So whilst I don't necessarily think it's a bad buy, I was reading more into the company, and I think its current position is worse than I originally thought. So whilst it is got a 5% dividend yield, which is great, I think other companies in my I have other companies in my portfolio that they have a higher dividend yield, such as British American Tobacco and AT&T. They have about a 6% dividend yield, but they're also in a stronger position, and they have more potential to increase in value as well. So that's why I wanted to focus my resources on better valued companies overall. So even though I'm removing it from my pie, I am not selling it, and it will still have a small place in my portfolio. So I will hold it, but just over time, its allocated percentage will continue to get smaller as I invest in other companies and don't deposit any more money into it, unless the fundamentals change, which I don't see anytime soon. So this also comes from, I wanted to try limit my pie to around 30 companies and focus on the best ones. This is so rather than just investing in as many as I can. So my strategy here is to cost average into pies consistently, along with my mutual funds in Hargreaves Lansdown as well. But I want to use 212 to also buy stocks outside of the pie where I think there's a sudden drop in price or a huge potential there. So if there's just any like really cheap stocks that I think could jump up. So one I have done recently is the Gym Group. So as I mentioned earlier as well, if Tesla drops again, I will likely buy some stocks. However, I won't invest in it consistently. I won't be keep constantly cost averaging unless it drops again massively. I wouldn't see myself putting into a pie, especially my dividend pie, because that's my strategy with 212, and also just to buy any cheap stocks that I think is a good value in the short term. So other than trading 212, new additions to my portfolio have been free shares I've received through my referrals on FreeTrade. So if you do want free shares from 212, FreeTrade and crypto, do check the links in the description and sign up to each of them. And me and you both get a free share. So overall, the referral free shares I've got from FreeTrade, they haven't been great. It's been around £5. Trading 212's average share I got was about 20, so it was quite a lot better on trading 212. But obviously it's all free, so I can't complain. I haven't decided to add this FreeTrade portfolio to my Excel spreadsheet yet because it's only a small amount of money, and I haven't used it properly yet. I've kind of played about with it. As you can see, I've deposited £2 and bought a fractional share of Microsoft, but the rest of it I just wanted to use it to get free shares, honestly, because you can't go wrong with getting a freebie. So I have decided to hold them. I was considering just selling them and putting into something that I actually want to buy in my mutual funds or my 212 dividend pie. But as there's no risk and it's shares that I wouldn't necessarily buy myself, I thought it's cool to have them just sitting there and just seeing how far they go. And like I said, it's only a small amount of value with no risk because they're free. So it also saves me the hassle of selling and rebuying and moving it from account to account. So overall, my kind of opinion on FreeTrade is I'm not too invested in it, pardon the pun, but I think 212 is a much better option. I prefer seeing the actual baseline of how much I've actually deposited versus how much is valued at, which FreeTrade doesn't offer. It's also small things like just the graph in general. I think trading 212 gives a much nicer overview than FreeTrade. Not to mention also trading 212's got like the pie features and it's constantly updating. And I think the community itself, and I'm quite active on the forum reading other people's thoughts and opinions. And it seems like the customer service and the innovation team all in 212 are a lot better than FreeTrade. So that's why I'm not using it quite heavily. I'm focusing on trading 212 mostly. So overall, this is my Excel spreadsheet I mentioned earlier. It's currently sitting just under £14,200, 14,190. So this is above my target, which you can see in the little line graph there. So that shows how much I plan to invest and deposit and thus what I estimated the actual fair value to be. So to do that, I kind of estimated a 7.5% growth a year, the stock market average, and then broken that down by month on month. So at the moment, I'm currently up because I've actually deposited a lot more than I initially thought. which is good because that just gives it more time value to grow even further, which hopefully will continue to grow. So I've been able to deposit a bit more just where everything's obviously been shut recently. I've been spending just less money, so I've been able to deposit and invest more. Simple as that, which is nice to see. And it means I can kind of worry about it less as time goes on, and I have more money put up front. So the final thing, just kind of a big news article that's kind of surprised me, is another cryptocurrency scam. So another area of my portfolio which has been surprisingly stable is my crypto. So I've been holding it for about 6 weeks now and not much has changed. I deposited overall about £275 and as you can see it's sitting about 265. So I'm only currently down, I think that £5 or £10 is just from the Coinbase fees, because I think they're ridiculous, about 4 or 5%. So with the more recent deposits I've done, I actually bought through Coinbase Pro, so that actually avoids the fees. It's like something like 0.01, which is like great for crypto because they're so expensive with all the other brokers as well. So whilst some of my portfolio has been relatively stable, there was quite a massive scam going through Twitter. So someone has actually hacked Twitter accounts. So it's like Jeff Bezos, Elon Musk, claiming that they're feeling generous and any Bitcoin sent to them, and they gave you an address to send a Bitcoin, that Jeff Bezos and Elon Musk, who they're claiming to be, will send you back double the amount of crypto. So you wouldn't think people would be as easily fooled, but unfortunately almost $1 million was actually sent to the account. So obviously this is very bad news and it's quite sad for anyone who lost money. But in a backwards kind of way, it's also reassuring in the fact that it was a failure of Twitter and it was more so the people's judgment of who sent to the crypto account rather than having another breach in Coinbase. So there has been breaches before, but since then they've updated and invested in their security. And I haven't heard of any breaches since then, which gives me confidence that hackers find it easier to actually hack Twitter and massive accounts and gamble on people willingly sending their money over rather than actually seeing it directly from a Coinbase account. So that's quite reassuring to me, because I think if you follow the guidelines of don't send crypto to money people you don't know if it's too good to be true, that's down to your own judgment and you can follow that quite easily. So whilst it did kind of reassure me in that sense, it did however make me conscious that obviously fraud and hackers are still out there and they always will be. So I currently do hold my money on Coinbase, but I think I will look into a safer wallet for my crypto, especially when I build up my portfolio and it has a lot more value. I definitely will be looking at maybe paper wallets where it's untraceable and all that kind of stuff. So this wraps up my portfolio this week. Let me know your opinion on Tesla and the crypto scam, or if you know anyone who's been a victim of it, that'd be quite interesting to hear. If you did enjoy the video, please do leave a like and drop a comment. And I'll catch you guys next time. So thanks for watching. Cheers.